Good morning, everybody. Hope y'all got a big old cup of coffee, just like me, so we can get in and talk about these things. First things first, thank you to all those who've liked, commented, and subscribed to the channel. It really does go a long way to help, and I've enjoyed interacting with some of you in the comments. So, that being said, just a reminder, everything we talk about, all these articles, I include links to them down in the description, so if you want to read it yourself or learn a little bit more or visit one of these fun sites like Crypto Potato, links down there. So check it out. Alright, first things first. Apparently there's some on-chain data that people are saying that accentuates that Cardano is mostly bearish. Boo. So, crypto market's seen a strong correction since its attempted breakout earlier this week, and Cardano's had a little bit of a slide too. Yeah, that's fine. We're all still waiting to see what's actually going to happen from this big futures expiration that happened yesterday that did absolutely nothing. But yeah, unfortunately for ADA holders like myself, data from a top blockchain analytics firm accentuates that a further move lower is likely. I'm not happy about this article because it accentuates problems I have personally with technical analysis. But yeah, no, they're saying the concentration of large holder of cryptocurrencies that are selling, large transactions, the smart price, which is the alternative evaluation metric derived from the composition of buy and sell orders, and of course the bid-ask volume imbalance. Basically, they're like, yeah, the volume's bearish, it's down a little bit. By the chart you can see, yeah, it's down. Bitcoin's also a little bit bearish, and they go back and forth with all these things. But yeah, based on all the technical indicators, Cardano is bearish. That's fine. I, however, dislike technical analysis because it always discounts real life change. And Cardano, seriously, we're in the midst of the Shelley rollout plan, as you can see here. Target release date is the 30th for the code. They're doing a balance check test. I believe there was some news that happened. As we get closer to July 29th, I do not care what technical analysis says. We're probably going to see some increases starting. Yeah, we might see a dip this week, but we'll probably see an increase as we get to the first staking rewards mid-August. As long as IOHK keeps to this plan, I really am bullish on Cardano, and I really get upset when I see articles like that, but it's worth talking about. Okay, let's move on to number 2. Zilliqa ZIL. It's staking on Binance is inbound, and they're projecting it's going to have pretty high demand. I mean, good for them. So yeah, both teams at Zilliqa and Binance are ironing out the final details. And they're thinking the yield mechanics, they're thinking about 5 to 10, but they have to restructure them on Binance to make sure they maintain it. And apparently you can stake it on KuCoin. So that's cool. It's not bad. You can see by this chart, Zilliqa has had a lovely little, it's dropped off a little bit, but it's okay. 11th of June, all-time high value of almost 3 cents on Binance. So yeah, with staking in the pipeline, they are really thinking that, there's going to be a high demand. So yeah, and here's this lovely guy. Given the interest shown by the community, we are fully expecting that staking on Binance will attract an overwhelming take-up, which could potentially impact the annual yield. That's how many people they think are going to be staking. It's going to actually drive down the yield. So with the primary goal of keeping it attractive, they're restructuring it to keep that yield in the 5 to 10. That's not bad. 5 to 10% isn't bad. If you got Zilliqa or you've been following Zilliqa, that's pretty cool. I don't know enough about this cryptocurrency project, but from the technical analysis perspective, which again I hate, it's got a 50-day downtrend, 100 and 200-day moving averages have adequate support, and it's got some short-term modes of support. Whatever. But hey, staking on Binance, that's always good. That really is. It's always good. More support, more spreading, and all that fun stuff. And then here's the little fun thing, Bitcoin Cash, which doesn't really get talked about, but it's a Bitcoin Cash fueled blogging website, Read.cash. It raised over about $100,000 for a collective initiative. That's pretty good. It is really good. So yeah, It allows people to fund content creators with Bitcoin Cash payments. Nothing wrong with that. On January 29, 2020, close to 6K in Bitcoin Cash tips were paid to Read.cash authors in about 24 hours. Okay. I mean, that's not a huge amount compared to like some of the giants we see out there, but that seems like a decent user base, especially for Bitcoin Cash, which I know has its own issues and problems. Like Bitcoin Cash trading about 230 with Bitcoin sitting about 9200. Oh yeah, to support our users, we created what we call the Read.cash fund. It's not a fund in the traditional sense, but rather a collective initiative where each participant agrees to pay Read.cash authors some amount daily. The fund exists only in the browsers of donors. We're not holding the money. Since they always control their money, they can cancel the pledge at any time, which also means the payments are done only when the donors come online. Oh, that's really cool. But yeah, no. Initially, about 3,600, but they announced the fund surpassed 100K thanks to one donor. There we go. Our most generous donor, Mark DeMessel, has decided to increase his pledge to the Read.cash fund to a total of $97,000. Oh, so it's all one guy who did it. Meh. I mean, good for that one guy. So Read.cash, if you're an aspiring blogger and you're struggling to, really explode on traditional websites and all that stuff, pop over to Read.cash. You might get a little bit of Bitcoin Cash paid out to you daily, and you can post your blogs there too. Hope I helped someone out with that. But hey, so that's the big news of the day. That's kind of a womp womp. I mean, 100K is still good, but it's all one guy. So whatever. Moving on to number 4. Crypto.com 10x crypto debit cards are frozen. Yay! But calm down for those of us in America. It's frozen in the UK and Europe. The Wirecard scandal, as we've talked about multiple days, we've been falling. They lied to auditors over 2.1 billion. Probably never even existed. Maybe someone stole it. I don't know. Just that it's gone. It's not there. So they ended up having to file for insolvency. Oh, good. Wirecard's now saying the funds probably don't exist. That's fine. They're fine. They just didn't exist. So, yeah. Our customers in those two regions will not be able to top up their cards or transact later today. Oh. And then 10x said something similar. Funds, however, are safe. The financial regulators made sure the money was issued and held with a separate bank. So there you go. You can continue to store, send, and receive cryptocurrency at any time with no interruption. And crypto is working on processing credits to the crypto wallets equivalent to the fiat balances held on the cards. So the other two companies are stepping in. It stinks if you went all in on these and you're like, I'm getting rid of all my credit cards. I'm just going to use this. That stinks. And that's why you should always have multiple options in anything you do, because you never know when something like this is going to happen. But hey, Wirecard. It disappoints me on so many levels. Just don't lie. Just be honest. Like, this company would still exist, still have their things, and still, be able to provide a service to us if they had just told the truth. So, all right, moving on to number 5, Bitcoin miners. Oh man, so an American Bitcoin mining firm, Core Scientific, just bought about 18,000 miners from Bitmain, which Bitmain is one of the largest ones in China. It's a troubled Chinese Bitcoin mining manufacturer. There we go. It's the largest number of Bitmain's S19 miners, and they're purposefully built to confirm transactions on the Bitcoin blockchain. So there are literally farms, just farms of these big businesses mining Bitcoin, which is why I personally kind of want to get over to the proof of stake model as fast as possible, because 1, the amount of power that is spent on these things is insane. 2, I can't run a Bitcoin miner in my house. 1, it'd be on all day and be loud. 2, it'd be hot. And 3, it'd take all this electricity. And then 4, it would probably take me a year to get one reward, because there's so many big guys like this. So yeah, proof of stake, proof of stake, proof of stake. Yeah, but it's really interesting because they bought these like not that long after the halving. So, they got to upgrade and like do all these things so they can help stay competitive. But yeah, most Bitcoin mining farms are located in China because it's cheaper. They have cheap hydroelectric power in the rainy season, and the icy winters in some areas help save on cooling costs. So, with this, oh man, for the next 4 months, their newly bought miners will be distributed among their 655,000 square foot network of data centers spread across the United States. That's a huge amount of miners. That's a huge amount of stuff. Oh my goodness. It's just crazy. The amount of infrastructure that's behind this, and we can't crack $10,000. But I digress. All right, so next up, Telegram. They have to pay $18.5 million to the SEC for a failed crypto play. Oh man, just briefly, it's a settlement. They got to pay a fine, and they actually have to repay the unspent ICO funds to the investors, which is actually over $1 billion. Oy. And Telegram had to abandon its own plans, but the community is going to do some stuff. So, yeah. Now, but it lets them move on from this scrutiny. The SEC had filed suit in October 2019, claiming the $1.7 billion raised in an ICO constituted an illegal securities offering. That's not good. So as a result of this, they admitted no wrongdoing, but they're going to pay $18.5 million. We didn't do anything wrong. Here's our money. They knew they weren't going to win, so they took it because it allowed them to get out without technically being classified as having done something wrong, but it looked pretty bad. But they also must pay back the $1.224 billion to investors that remains unspent. The company actually has already taken that step. It's offering either to pay back the remaining percentage that they're owed or keep the amount as a loan and pay back 110% of the original investment in a year. Not too bad. Having the Telegram Open Network, or TON, would have been better, but at least this way people can get their money back. It's a good move by Telegram. I do use their service. I don't pay for anything on their service, but I do use it. It's interesting. There's a lot of cryptocurrency channels that you can follow, especially about your specific ones. It's mostly just trash comments, but it's good to have. And some of the Telegram channels are actually sponsored by, the foundations and organizations that are behind a lot of these larger cryptocurrencies. Yeah, so they had to abandon it in May. Added the ICO in 2018, and then they SEC files, and they go back. Telegram's lawyers tried to defend it by saying the company wasn't selling cryptocurrency, but rather the rights to the ones that we mentioned down the line. And the SEC, they didn't like that. I mean, I'm not a lawyer, but it smells like some bull. Alrighty. Moving on to good old India. Whew. I mean, we need India to get into crypto. We really do. There's over 1 billion people. If we can get 1% of those people to try out cryptocurrencies, that adds how many more of us? That adds how much to the price? That does what to all of our holdings? Yeah. So, but people are freaking out because, in March, they repealed it because of the Supreme Court. So there was everyone breathed a sigh of relief. But then an interdepartmental consultation regarding a draft law that sought to ban all cryptocurrency activity leaked. It had been swirling around, but has been debunked. I looked for a little bit, and I couldn't actually find any articles about how it was debunked. But I did 30 seconds of searching because it's early, I need coffee, and I wanted to get this content out to y'all. So I'm trusting Cointelegraph on this one. So Nishal Shetty, the CEO of crypto exchange WazirX, which I actually believe was bought by Binance recently. On the day the note broke out, it created some panic. That's it. We're not seeing any difference in the trading behavior. There's been speculations. With more than 5 million crypto users in India, I'm confident the Prime Minister won't let us down. Never trust anything or anyone, not even not even yourself. So yeah. So in addition to the Royal Bank of India, a few private banks are been reluctant to process crypto transactions for the various firm. However, it could be a lack of understanding and knowledge of the industry, as seen with most governing bodies and larger corporations. There might be, however, a deeper conflict of interest. Banks will always be against the industry globally. They just will. P2P transactions eliminate the need of third-party bankers, or at the very least takes them from an absolute necessity to more of a fun option for those of you who want to get your funds locked up. But yeah, so they're kind of, people aren't sure. They recently repealed this ban. There's been news floating around it might be rebanned. It's the same situation that we had in the US a few years ago and kind of still do. Current president does not care for Bitcoin, but a lot of states are moving to adopt regulations and making it easier for people to use. So there's kind of this weird play going on right now in our country, and especially now in India. Everyone is trying to figure out how to incorporate these new things into the existing systems, or if they need to try to stomp them out because they're going to tear the old system down, which the current system sucks, so tear it down for all I care. But yeah, no. But hey, crypto industry is growing, and there, India, WazirX was acquired by Binance. All these different things, it's been growing rapidly. Like, this is a good thing. India, just let it through. Just let it through. Just don't fight it. Just don't fight it. Shouldn't have said that. All right, moving on. Bloomberg, Bitcoin's a caged bull. It's ready for a breakout, and it's eyeing a $13,000 resistance level, which the Bloomberg analyst, Mike McLaughlin, feels that it probably will be able to break it out. He contends, Bitcoin is consolidating, which I would agree. It is consolidating forever without end for most of us. Oh yeah, an upward sloping 260-day moving average. That is the level we're at. Volatility is relative to the same metric for gold. It's the lowest since the bull run record 2017 and way below average. So they're saying it's primed for a breakout. When it exits its cage, about 13K is a good initial resistance target. Sustaining below the bottom band at about 6,500 would jeopardize the uptrend. So basically he's saying Bitcoin can continue to drop below 9,000, maybe even to 8 or 7, but if it gets to here and busts below that range, it'll bust out of whatever technical analysis mumbo jumbo they're trying to push on us now. All right, moving on to numero nueve. So yield farming pool concept may solidify Ethereum's role as Bitcoin's main sidechain. That's pretty cool. But then it gets really complicated. So DeFi applications are definitely booming right now. So recently, the platform Synthetics partnered with BitGo and the Ren project to create incentivized Bitcoin liquidity. Now a massive yield farming pool, tokens like SBTC, RenBTC, and WBTC could be easily eclipse the alternative alt-chain competitors. News.bitcoin.com reported on this, and it is insane. New stats from Ethereum blockchain blows these two statistics away up here. I mean, dear God, there's a total of 263 million TVL locked in Synthetics at press time. Project WBTC, backed by BitGo, has 66.9. Oh my God, TVL. Look, I do not understand yield farming and DeFi at all, but it's definitely insane. You get these total value locked. This is now one of the largest pools, and it's leveraging things, and it looks like they can get 1% in 24 hours. You can't get 1% on a bank account in a year. It's insane. It's ridiculous. Just ridiculous what they're doing. It's probably, be very, very cautious. Do your own research. Really do your research on these, because this is high risk. But the rewards, it might be worth looking into. I'm kind of looking into it. I got a wife with a kid on the way, so I don't want to go risking lots of money, but at the same time, 1% a day, Dear God, that's a lot of money over the course of a year. And finally, let's talk about elite hackers again on my favorite site, Crypto Potato. Such a fun name. I love it. So, yeah, apparently most malicious Google Chrome extensions have come from a single internet domain register, Communigal Communications, or Galcom. 33 million downloads. Dear God. And it's really risky for those of us who have crypto. There's actually one guy pretty recently, the host of the Protocol podcast, Eric Savix, 12 Bitcoins is what they got from him. He had a fraudulent Chrome extension, a fake keep key. He entered the recovery phrase into it, and it gave access to all of his holdings to the hackers. Be very, 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 very careful. But yeah, because this is bad. So here we go. The USA-based network security company Awake Security informs out of 26,000 examined domains registered Galcom, over half turned out to be suspicious or malicious. This reachable domains hosted a variety of traditional malware and browser-based surveillance tools. Like, be very careful with what you put your extensions on, review them. Do not respond to text messages or emails. If you want to update your extension, do it directly through Google Chrome or Brave, and go to their website if possible. And be very careful and make sure it is their website. I saw a very interesting one with Stellar and Stellar.org, where the only difference was one of the L's in Stellar was, I think it was just a lowercase I. So you got to be really on top of things. Keep an eye on your URLs. Alrighty. And then finally, crypto markets trading sideways as we expected. Just a rock. Just come on, do something. Pretty much everything's like down. Oh look, Tether's up by 0.08%. Looky there. Yeah, there's just a lot of red in this market. Augur's having a good day. Aave's having a good day. That should be getting listed on Binance here soon, all that fun stuff. But enough of me waxing and waning. If you made it this far, thanks again for listening. Please leave me a like, subscribe, drop a comment down below. It really does help out a small channel like mine. And as always, all the articles discussed are down in the description. It was great talking to y'all, and I will see you guys tomorrow for more discussions on the interesting and weird crypto news of the day.